Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on the show today?
We're going to talk about two favorites, Colonial Coal and Brunswick, one which is up without news and the other which has had news but has not yet gone up.
Is Colonial Coal any closer to getting bought out for its metallurgical coal assets in northeastern British Columbia?
This is the third year that I've had David Austin's Colonial Coal International Corp as a KRO favorite based on the expectation that they will eventually receive a buyout in the $5 to $10 range, which values them somewhere around $1 billion plus for their 100% owned Huguenot and flatbed metallurgical coal projects in northeastern British Columbia. Now, Colonial Coal has taken these projects through the PEA stage of feasibility demonstration. They did Huguenot in 2018 and Flatbed in 2019. And so everything is understood about what is involved to develop them, what it will cost. Obviously, the numbers will have to be increased to accommodate the inflation of the past few years. But once they did that, they settled back into the mode of we are now going to shop around these assets. We are not a coal production company. We want somebody to buy them out. Now, it's always difficult when you're dealing with the word coal as part of your story. There are two types of coal. There's metallurgical coal and there is thermal coal. And both of them do generate carbon dioxide emissions. In the case of metallurgical coal, it is added to blast furnaces with iron to make steel. And in the process, the coal gets burnt up and much of the carbon disappears as carbon dioxide into the atmosphere. And in the terms of thermal coal, it is burnt for energy. Now, the difference between the two is, yes, there are alternative ways of making steel without adding metallurgical coal to the mix, but it is substantially more expensive than using metallurgical coal. And the world, especially the global south, such as China, such as India, and global east, such as China, they are not interested in making super expensive steel just to prevent the carbon dioxide emissions. So metallurgical coal kind of gets a pass from a lot of investors. In the case of thermal coal, there are completely clean alternatives such as renewables and nuclear to make energy. But even worse for thermal coal is that, at least in places like North America, natural gas, which is a fossil fuel, but when it's burned, it doesn't have any of the other particulate pollutants that are really bad for anybody who inhales them if they aren't expensively cleaned out of the smokestack, but it also produces a lower carbon dioxide emission per unit of energy. So coal is, it's not an attractive alternative. So investors will distinguish between metallurgical coal and thermal coal. And for those investors seeking to keep fossil fuels out of their portfolios, this has been a problem for companies such as Teck. And even though they can make the case that this is steel-making coal, not thermal coal, the public generally doesn't understand the difference. So last year, Teck decided that in order to get value for its base metal operations, which are basically the same company as its metallurgical coal production facilities in British Columbia, it decided it was going to split them into two separate companies. They put out this announcement in February. Then a couple months later, in April, Glencore shows up out of nowhere with a $22 billion U.S. proposal, initially all based on paper, whereby it would take over Teck, combine its base metal operations with its own non-coal operations, and of course that did include oil. And then the metallurgical coal, it would bundle with its 26 thermal coal operations and spin that out as a separate company. And that package was going to be worth about $22 billion to Teck shareholders. Now, Teck rejected this immediately. A week or so later, Glencore came back and said, okay, we'll offer you people the option of taking cash instead of shares in the coal spin-out. But that ended up being rejected. And in April, Teck's own proposal to split itself was shot down by shareholders. So this was kind of not a very good development for Teck. Glencore was still in the background. But in November, they finally reached a deal where Glencore would buy Teck's metallurgical coal division for $6.9 billion. And this would give Teck a big cash infusion. It would allow the market to see it as a company that's just pure base metals and be priced accordingly and participate in the whole energy transition story and not have this sort of discount assigned to it because it happens to have a division that produces coal, in this case metallurgical coal, but the market generally doesn't really distinguish between thermal and metallurgical coal. Now, this will still take a while for approval. It's now plodding through the regulatory approval process. They think it will happen in the third quarter of this year. And what does this mean for Colonial Coal? Well, Colonial Coal has traded in the 2 to 250 range on like daily volume of about 150,000 shares so far this year. It hasn't put out a meaningful press release for over a year. In fact, the last time they did was in December 2022 when the stock was being pounded in the wake of an environmental regulatory decision to deny a mining permit for the Sokunka project that Glencore had acquired and had spent almost a decade trying to get approved. The market suddenly saw this as a sign that there were not going to be any more approvals of metallurgical coal operations in British Columbia and said, nobody's going to want to buy Colonial Coal. And so the stock was being pounded and the company came out and explained, no, this is different and all that. And in fact, I devoted a subsequent Kaiser Watch episode explaining that the particular circumstances of Sokunka was a real difficult situation involving caribou habitat and First Nations in the area, which did not apply to the locations of the Huguenot and flatbed projects of Colonial Coal. So what was unusual today is that the stock closed up 52 cents at $2.69 on 459,300 shares. That's the biggest move and biggest volume in a very long time. In fact, it caused some of my KRO members who follow Colonial Coal to speculate in my Kaiser Research Slack forum if somebody is front running an actual bid for this company. Now, the interesting thing about a company like Colonial Coal with an oddball mineral metal such as metallurgical coal, it is possible to actually see a bid materialize at a substantial premium above the current market price. This rarely happens for base and precious metals advanced companies because the kinds of companies that develop and operate such mines, they're only allowed to pay a certain premium above market price. And this is a big problem for the resource junior sector these days, ones that have advanced projects, because there is no institutional audience for these companies who can see what the potential buyout value is and is willing to bid up the stock price and get it close to a level where management is comfortable allowing the company to be swallowed by a producer. And of course, that makes it acceptable for the producer to give 10, 20, 25% premium above market to make the deal happen. With obscure companies like Colonial Coal, the buyers, they understand these are strategic assets. There isn't a developed market to properly price them. So David Austin has always been confident that this company will disappear in $1 billion plus bid one day by perhaps an Indian steel maker that desperately needs a secure supply of metallurgical coal for its steel mills. And so it's been a waiting game for the last few years. Now, was somebody front-running good news next week that a deal is in hand to make the stock disappear at $5 plus? Well, it turns out not quite. The informal news is that Citibank has signed on to be Colonial Coal's formal advisor with regard to a buyout transaction. And Citibank does not normally deal with Canadian-listed resource juniors. It normally deals with big companies like Glencore and Xstrata when they merged, and that's the sort of business it does. So when this word got out that this deal had been signed, and I doubt we'll see a press release because this is not actually a material event, the market said, oh, something must have changed in all the tire kicking that David Austin has been experiencing for the past few years. And last year was kind of lousy because when Glencore came along with the distraction of wanting to take out Teck, and then there came this business when Trudeau and Modi got into a spat over assassination of a Sikh on Canadian soil, and suddenly all the potential Indian interested parties backed up, but that's all now behind us. Now with the Glencore acquisition of Teck's metallurgical division happening, subject still to regulatory approval, but no longer subject to shareholder approval. Now all these other parties are thinking, okay, Glencore has these Canadian metallurgical coal operations, and it has its 26 other thermal coal operations. It got skunked on Secunca, and maybe they will be in the market to take out other assets in northeastern British Columbia, where Huguenot and Flatbed are located, along with Teck's Tumbler Ridge operations. And so now there may be serious interest, and you bring on somebody like Citibank, who can also do their own homework and understand that there is serious interest. And maybe we are a lot closer today to a buyout of Colonial Coal than we have been for the last few years.
What did Brunswick's first results for winter drilling at Mirage tell us?
At first, I was quite taken aback by the way the news release was presented. They reported assays for only 4 holes. 2 of them were narrow intersections with not particularly interesting grade, and 2 of them were good intersections with good grades. But they announced that they had drilled 35 holes, and they provided a drill plan, and I looked where all these holes were located, and I could only count 22 out of 35. And I said, well, where are these other holes? And what's with the numbering of the holes? Last year, they drilled 36 holes, and normally from the following year, you change the 23-36 to 24-37. So we should have holes 37 to 71 at the lab, awaiting results. So why do we get assays for number 49, 57, 58, and 60? This immediately caused people like myself to wonder, and they also didn't put the hole numbers for all the other holes on any of the dots that they had on their map. It made me wonder, is this as good as it's going to get for this year? Is Mirage turning into an actual mirage that is dissipating before our eyes? Why do we get holes 49, 57, 58, and 60? And this is where it's helpful to actually be able to call the company CEO and run these questions by him and get answers. And I got really good answers from Killian Charles, and I'm now actually, after being a little bit demoralized earlier this week when these results came out, I'm actually quite pumped about what's going to come from the rest of the results. It turns out that in the drill plan, those holes are actually drill pads. And some of the drill pads, they had 2 or 3 holes drilled at different angles in the same direction. So you just see the hole and the trace, but you can't see anything underneath it. So these are 22 drill pads from which 35 holes have been drilled. And the reason they only numbered the ones for which they reported assays was, we didn't want to make the drill pan a complete mess of confusing numbers, so we left those off. So why would the oddball hole numbers that were disclosed? Well, it turns out they had 2 rigs going, and again, with 2 rigs going, holes are finished at different speeds. They're following a sequence. They will hopscotch each other. So usually, like what we like to do when there's a single rig drilling on a property, we like to monitor the drill sequence number of the holes to see how the geologists are interpreting the core as they're logging it about what's going on. Because to a large degree, drilling programs are vectoring programs. You help to have enough drill sites permitted to give you flexibility, but where you move the rig next builds on what you have intersected in the hole that you just drilled. But when you have 2 rigs doing this, going at different paces, that ends up that doesn't mean anything. So it turns out that the sequence in which holes went to the lab was not like from hole 37 to 71. It was more of a mix. The only one for which there appears to have been an exception was hole number 60. Now, hole number 49 was drilled into what they call the MR6 dike. It's the central dike. It is the thickest. It has big, thick, good intersections. The south zone has narrower intersections, but higher grades, 2% plus. They didn't drill any holes into that. They mainly focused on the central zone, MR3 and MR6 dikes, and in the north zone. And one of the things that they have made clear, and Killian confirmed that, yes, I read it correctly, it looks like that lake that's in the middle, that looks like a barbell, with sort of bigger lakes at both ends and the skinny sort of connector in between, that's actually an anticline. And that lake is the fold axis, which is why the dikes on the north side dip to the north and the dikes on the south side dip to the south. And the middle part, so imagine a bowl, that's been eroded away and has disappeared. So we have these 2 dipping dikes on both sides that are the same thing. Now, hole 60 is about a 250-meter step out to the northeast on the central zone. Last year's holes were drilled right onto the boundary of the inlier claims, in which they can earn 75%, and the rest will be owned by Electric Elements, the Sean Rusin's own lithium company. And this hole had a very good intersection, and it was drilled under the lake, and it came back with several intervals, the best one of which was 31.6 meters of 1.71 lithium oxide. Now, the reason they rushed this hole was the point of the winter drill program was to drill those parts of this area that are hard to access during the summer. In this case, they wanted to be able to drill from the ice. And so they drilled this hole from the edge, step out onto the inlier claim property, got good-looking core, and I believe got it rush assayed and got this back. But they already knew from the, what the core looked like. Oh, this thing obviously continues to the northeast, and in fact, they have an outcrop 3 kilometers further up ice to the northeast where they haven't done any drilling yet. So they went ahead and drilled 6 more holes in this area to the northeast. And this is all new territory where there are no holes. When I questioned Killian, he wouldn't say anything about what was intersected. The one thing I picked up was frustration. They wanted to drill these holes from the ice, but because the winter was warm, they couldn't thicken the ice enough to feel comfortable that the rigs were going to be safe on it. So they ended up drilling all these holes from shore. And if these end up running and confirming that, yes, this dike system extends another sort of kilometer to the northeast from the kilometer that they got indicated on their 100% ground, they may be able to put barges on the lake and drill those holes from the barges. Now, as I'm putting all this together, I'm realizing, okay, the one hole is really important. It's a brand new territory. They've got 6 other holes in this area. Hopefully they weren't just blindly following some drill plan. Hopefully they were using vectoring to continue drilling in this area. And Killian says, well, we got these holes out because we had them. Market was becoming impatient. We got them out. We're going to be putting out bigger batches over the next few weeks as they come in. And the fact that we published these first doesn't mean these were the best holes that we sent. It's just how they ended up being submitted, except for hole 60, which was strategically important. Now, there was the last 2 holes I asked him about. They were drilled at the southeastern end of their south zone, and they were drilled in 2 directions. And he asked him, what was that all about? You didn't drill any holes into this dike. And one of the things he pointed out was that part of this drill program was to drill areas that are harder to access during the summer, which also explained why between the CR3 or the MR3 and MR6 dike, there's a 250-meter gap between 2 lines of holes that they drilled across. And I said, well, did you leave that because those fences came up empty and that gap is big? He says, no, we drill those holes to demonstrate that, the strike continues, but we can drill that in the summer. This we can put the drill on and just infill drill it and put it all together. But those last 2 holes of the season, they have been sort of scratching their heads what to do about that 3.5 kilometer long boulder train that's down ice from this. And the interesting part about this story is the mineralogy of this substantial boulder field. Some of these boulders are 6 meters wide, and they have very large and abundant spodumene crystals. These boulders have a micaceous mineralogy, and in all the outcrops that they've drilled, none of them have this micaceous mineralogy. So these boulders remain unexplained. And, it's been suggested, why don't you drill some scout holes underneath them to see what the geology is like? Maybe they've just been frost heaved up and are sitting right on top. So those 2 holes were drilled at the end of the season as scout holes. He wouldn't tell me what they intersected, but I did get him elsewhere in the conversation to say, yes, we have still to intersect anything with micaceous pegmatite that's spodumene enriched. So this target remains a major target for the summer. Now, one interesting thing that I also learned from him is when they drilled that hole M60, they started playing with gravity surveys. And Winsome has had success using gravity surveys to locally figure out where these dikes might be because they are lower density, so you're looking for gravity lows. Now, lakes themselves can be very misleading in terms of creating gravity signatures. And when I talked to Bob Wares in Vancouver at VRIC, he was extremely negative about all these geophysical methods. These pegmatites are absolutely blind. Yeah, you can see structures where they may have been placed along, but you can't tell whether there's any pegmatites in it. And apparently, he is still adamant that this gravity stuff is BS. It doesn't work. But the gravity survey showed a gravity low under that northeastern barbell of this strange-shaped lake. And when they drilled this gravity low, yes, they got the hole 60. They got the good intersection. So they've got at least a coincidence, a correlation of gravity low with interesting results. So they did it on the southwestern barbell of this lake. And I asked Killian about the map. He said, you've got no outcrops to the southwest. And you've also got no boulders plotted on the last updated map that you gave of this area. Is it dead down ice from there? And he says, well, there's no outcrops because the area has lots of overburden, which is also the problem where they have that big boulder field just a bit to the southeast. And but we do have boulders there. There are boulders down ice from that lake. And when they did the gravity survey, lo and behold, there was a gravity low. So right now, there's sort of a dueling match between Bob Wares, who says, no, that's a mirage. That's a real mirage. And Killian's and the other geologists say, no, I think we have a tool where we can see where these pegmatite dikes are. So in the summer, when they go back, they will be drilling from the shore of this lake to see if they can extend the north limb to the southwest. So they will be back in the field in June. They'll spend a month doing intensive prospecting in the area, and then they'll resume drilling in July. In the meantime, we should get all the results showing us what's going on there. And the most important ones to wait for are the ones to the northeast on the Inlier claim, where we have like a kilometer of potential strike extension. And if those come good with thick intervals of 1 to 2% lithium dioxide, that's going to be a significant bump for the company. And in terms of what the fire situation looks like, although the winter has been warm this year in Quebec, Ontario, in fact, the geese are already migrating north as if they want to bypass the annual Cree goose hunt, and the Cree are right now scrambling. We better get up there and get ready before they fly right past us. This winter has been moist, unlike last year, which was a very dry winter, and really set up things for these forest fires to suddenly catch and go out of control. And this could still get very dry in May and June and make things bad, but at least the first 4 months of the year have been more average moisture that doesn't really encourage the tinder and stuff to catch fire and get big forest fires going. Now, one problem they do have is in certain areas there's like peat bogs and that caught fire that are still smoldering, but they have figured out where they are. The fire agencies are watching these very carefully for these things to flare up and to put them out before they get out of control. So we have our fingers crossed that this summer we will have a full season of boots on the ground, generating targets, setting the stage for drilling later this year. And, it's important to do this. I mean, in the past couple of weeks, we've seen sort of a pissing match emerge between CATL, the big battery maker, and the Japanese. CATL claims that tried to make solid-state batteries. It's impossible. What you guys are talking about is a mirage. It's not real. And last week, Nissan even came out and said, we also have a solution for the solid-state battery, and we'll have one out in 2028. So the Japanese car makers are going all in on developing a solid-state lithium-ion battery, which will, if they are successful, enable them to leapfrog the BYDs, the Teslas, all of them who do not have solid-state batteries, who are using other types of batteries. And these solid-state lithium-ion batteries, they will require a lot more lithium supply by 2030 and beyond than if they just stick to the liquid electrolyte batteries, which just are not ever, in my view, going to be good enough for your ordinary consumer to want an electric vehicle with long charging times and short ranges and all that sort of stuff. And the other thing is Honda, who's forming an alliance with Nissan to develop electric vehicles. It just agreed to spend $11 billion building a battery and electric vehicle plant in Ontario. And they've got to be doing that because they expect a reliable supply of lithium from Canada. Some of it will come from Ontario, but I think a lot of it will come from the James Bay region of Quebec.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.